The 360 on Energy and Carbon, hosted by 360 Energy. On today's episode, we are joined by Craig Stewart, Vice President of Federal Affairs at IBC. Craig Stewart leads national work on disaster resilience and climate change at the Insurance Bureau of Canada, also known as IBC, the industry association representing the property and casualty insurance industry in Canada. IBC's members employ over 122,000 Canadians and paid out $9.8 billion in property claims in 2016, primarily due to severe weather and wildfire. Previous to his work with IBC, Craig directed the Ontario Bureau and Arctic Program for WWF Canada, handled pandemic liaison, trade liaison, and humanitarian donations for GlaxoSmithKline Canada. He directed a $60 million federal, provincial, territorial program at National Resources Canada to elevate the Canadian geospatial industry. Craig holds a Master of Science from the University of Calgary and a Bachelor's of Arts in Political Science from the University of Toronto. He is the author of 2 atlases on the Rocky Mountains of Alberta, British Columbia, and Montana. Now let's get into the episode with Craig.
Well, welcome back, John and Craig. It's great to have you both back again for our second podcast about the insurance industry in Canada.
Thank you. Yeah, it's good to be back again. I'm looking forward to what we're going to talk about.
It's good to be back. Yeah, thanks for inviting me back for a second program.
I was interested in the previous podcast you mentioned, and it's something I think we forget, that the insurance industry started from fire insurance. And I can remember I used to work for a large retail operation in the UK, and part of my work ended up about looking at fire engineering and things like that. And one of the things that we had there was that the insurers would take a very proactive approach about what you should need to do to mitigate the risks, whether you needed to have sprinkler systems, et cetera, et cetera. So there was quite an interaction there. And I suppose the question I was thinking on with that we then moved on when environmental issues came in, and you would get guidance from your insurance company about things about if you're handling hazardous fluids, or you might have oil seeping into a water course. And again, there was the interaction. Where I'm going with this is, what is the industry doing today to sort of engage the insured to sort of do something about climate change?
So again, thanks for having me back. Insurance was really founded around fire, I think actually in the UK about 400 years ago. And we handle fire pretty well. I think we've got that down now.
Yeah. I think you have.
One of the key innovations around fire were to offer premium incentives to help incent good behavior, both at the community level and at the property level. So, in Canada, where I am, we offer discounts, premium discounts for residents who live close to fire stations. And that provided the political will, if you will, for communities to build fire stations and, all communities across the country. At the property level, we reward homeowners who have smoke detectors, who have fire extinguishers. We talk to them about the type of fireplace that they have. So there's a standardized survey called the Fire Underwriter Survey that we use to gauge risk and to reward consumers that protect themselves. And that's fairly standard about how our industry operates around the world. We need to take that innovation, that thinking, and apply it to nudge people in the right direction when it comes to climate risks. So in Canada, some of our members are now offering discounts for people who deploy sump pumps in their basement against flooding, seal the cracks in their basement walls, or install flow prevention valves in their basement to make sure that municipal water sources during a flood don't back up into people's basements when it's pressurized. And so there are all these sort of things that we can do to nudge folks in the right direction, and by playing with the product and the way it is structured and the way incentives are provided. So I'd say that is sort of a key thing that we're learning from fire and now applying and have the opportunity to apply when it comes to other risks, particularly those now exacerbated by climate change.
It's a supplementary question based on what you just said, Craig. Is there required, and because most of our listeners that we're dealing with are in a business in some capacity, whether they're manufacturing or agriculture in some fashion, but is there a survey or requirement for insured clients to fill in to to address or talk about what they're doing to help mitigate climate change? Is that something that is being done or being considered going forward for the insurance industry?
So we can see it heading that way as we get to, and we're going to talk about this probably in a bit, as we get to disclosure of climate related risks in the workplace. As we explore that area, there will be the linkage about how do you leverage good behavior by a corporation into better insured rates. We're not there yet. Early days. I know there are fears that people are going to say, oh my gosh, if I disclose the risks that I face, somehow I'm going to be penalized for it.
Yeah.
Not orphans for that at this point in time. That's not, those connections haven't been made. The intent would be to make sure that we're doing it in a positive way, not punitive, but rewarding, focusing on the carrot, not the stick, in order to make sure that people are nudged, not forced into the right direction.
Could I was going to say, could I come in with a bit of a supplemental there? I think one of the things that's perhaps worth looking at is from the insurance point of view, should we say your customers taking adaptation action is probably a key thing in terms of improving their resilience, as opposed to mitigation, which is the sort of longer term thing. But of course, I think this is part, we were talking in a previous podcast about literacy. I think people need to understand we've got to do the mitigation, but as you mentioned before, the rate of disaster and things that are happening, we've also got to do adaptation. I'm slightly pessimistic about how well we're going to do in mitigation. I think the ambitious 1.5 degree targets and things like that are ambitious. And I think it only makes sense that we've got to look for adaptation as well. And it strikes me that insurance may be one of those things that does drive some organizations to look at the adaptation issue.
Adaptation has been a bad word in mitigation circles. Because they see adaptation as an excuse not to deal with the source of the problem, but rather to put a Band-Aid on it. Al Gore, 20 years ago dismissed adaptation pretty effusively, but he actually did harm in doing so. And if you take a look, we love Mark Carney. Mark Carney has done a wonderful job during his time as governor of the Bank of England and afterwards in really work he did with Michael Bloomberg on the task force for climate-related financial disclosures and his work on financial stability. But his work has almost solely been on transition risk and focused on stranded assets and the flows of investment capital, very little on physical risk. And in this country, in Canada, the dialogue around climate change has almost been exclusively around emission reduction and very little around adaptation. That shifted, I think, last year when we had massive wildfires, heat events in Lytton, and then a significant flooding event in November in British Columbia, where, insurers finally were saying, look, this is now. Like, we're not talking about climate-related risks in mid-century, that if we don't reduce emissions now, we're going to be suffering something 20 or 30 years down the road. There's a whole bunch of baked-in effects that we're facing today. It's causing our industry significant losses, as we talked about in the last program. We need to act now on adaptation. And these things aren't exclusive. They go together, right? And so if you retrofit a home with a heat pump or energy savings, that heat pump can also provide air conditioning during heat events to people who are vulnerable, to the elderly, low income, who otherwise can't afford it. So there's synergy between these two efforts. They don't need to be exclusive. And we need to stop talking about mitigation versus adaptation. It's both. And we need to prioritize both now.
Yeah, I think you're so right on that. I agree with you. I've been working in this space same sort of time as you. There was in the early days, it was almost, you shall not mention the adaptation word because it will stop people mitigating. But I think where we are now, we've got to do both. We really have. Yeah, thank you.
Greg, there's been a lot of discussion about ESG in the marketplace, and I'm wondering what perspective the insurance industry has on ESG and how that's being used as a tool or a vehicle to help you out in the work that you're doing.
So we need to take the long view. Our industry is, notwithstanding what I just said around emission reduction, we need to take the long view. We know very well as an industry that we do need to address the source of the problem, and that whether we're investing or underwriting carbon extracting assets, when we're doing so, we're contributing to future risk. And therefore, these things, you can't reconcile. We need to start through our A number of our members have gone public now with very specific measures to say they're not going to underwrite thermal coal, for instance, not going to invest in thermal coal, and we're beginning to see it spread to other areas of carbon extraction as well. That's just shareholders are now increasingly expecting that, and we're seeing insurers, as well as banks and pension funds begin to respond. And when it comes to ESG, sustainable finance has become that focus. There's been tremendous work out of the UK to lead in this area. When we have the Task Force on Climate-Related Financial Disclosures now, which provides guidance on disclosing risk, then, creates basically fiduciary responsibility to a board to be able to identify, disclose risks, and then create action plans to deal with those risks, transition risk, liability risk, and of course, very important to us, physical climate risks. When we, as an industry, when this came about, we asked our members in Canada, how do you want us to address this? And the CEOs stepped up and said, we want to address this directly. So we actually create a board level committee of CEOs to help drive an industry position around a timeline for disclosing when our industry is going to, have an industry-wide approach to disclosing risks by, given, something that's time bound. And they've been very proactive on it. So taking it to our industry. Insurance, obviously, we're on the front lines in some regards, so it won't surprise folks that we're taking it so seriously, but certainly we're taking ESG very seriously, particularly around the climate side, and it applies both to the emission reduction as well as the physical parts of the equation.
Yeah, thank you for that. I'll just put in there a little ad. If people want to know more about ESG, we do have a couple of podcasts on ESG, and they can find out all about it there. My question to you, I think, is a sort of more of a structural one about the industry as a whole. But what actions do you see the insurance industry taking to limit its exposure to climate change?
Well, the industry there's a couple of things. One, primary one, is addressing model risk. So in Canada, Fort McMurray wildfire in 2016 caused almost $10 billion in insured losses, significant amount of losses. A lot of it was business interruption losses at the time. And the losses in part were due to the fact that we didn't think a wildfire could occur that way and hit a community so quickly that way so that it couldn't be defended. And it came to our wildfire models, the way our risk or hazard model for wildfire. Our flood hazard models in this country are terrible and they are improving, but they're not where they need to be. So the models that we use to underwrite risk globally aren't where they need to be. And so what's happened is regulators have said, well, we want you to put money aside because we don't trust your models. And we're afraid that you need to be well capitalized for losses because we don't trust the models you're underwriting. That is an area that we are squarely focusing on, is how to improve the quality of those models, and whether it's insurers speaking directly to their vendors, or whether it's us talking to governments and saying, the base mapping data that our models reside on, frankly, needs to be better. That's a key area of focus for the industry. Another area is just simply making sure that the risk is diversified, improving our ability to take a look at where there's a concentration of risk. Floodplains, again, big one. And if we're not offering products there, working with governments so that products risk can be offered, innovated and offered in areas that are at high risk, as we talked about on the last program. There's considerable conversations there around right now to try to make sure that we're deploying insurance the way it's meant to be deployed, which is to protect those that frankly are at risk.
Thank you. Yeah.
So I think we talked about this in some fashion in our last podcast, and I don't want to be over dramatic, but the question is fairly dramatic, is do you think that climate-based risk will sometime in the future be uneconomical to cover?
In fact, this is an opportunity to innovate. And I'll give you a clear example of that. We can de-risk these places. There's a lot of risk out there, particularly around flooding, where we know we can mitigate that risk through investments in infrastructure, whether we're diverting water, whether we're sacrificing agricultural fields so that water will go into the agricultural fields, or a sports stadium, as John has talked about in the past. There are ways that we can innovate and direct water where we want it to go. And we can bring private capital to the equation. Up till now, it's been very much, around government subsidies for infrastructure, governments building this. But there's a role for the private sector to play. In Canada, we actually have an infrastructure bank that's been set up now, Canada Infrastructure Bank, to explore public-private partnerships particularly around projects related to emission reduction. We're looking now at how can we apply those to deploy resilient infrastructure that will protect communities from flooding and other events. Is there an opportunity here to innovate by pricing climate risk, basically doing what if models based on past experience about if the infrastructure there, would losses be averted and how much? And then taking those numbers on loss avoidance, turning them into some sort of financial instrument that would then reward investors for investing in that infrastructure. There is an effort, again, out of the UK, led out by Willis Towers Watson and the UK government. It's called the Coalition for Climate Resilient Investment. That's trying to crack this nut, figure out how do we do this so that we can bring in private capital into building infrastructure that will protect communities. And in Canada, we're taking a very close look at the CCRI work and trying to innovate also within the Canadian space. There's a couple of insurers that are stepping up, talking to the Canada Infrastructure Bank around this. And so it's an opportunity. So to answer your question, no, I don't think it will become uneconomic to convert. I think that, with a bit of ingenuity, with the right partnerships, we can make sure we're de-risking and maintaining places as insurable. But again, it takes collaboration.
I think it was a great answer because, Craig, something that we've been talking about in these podcasts is, the intent is not to fear monger, and there's a lot of that stuff going on, but we actually think it's opportunistic for organizations to actually look at new business opportunities that they never consider that they could do in the future. And we far too often, we talk about risks and they have to be considered, but we, John and I have been beating the drum that this is an opportunity for organizations to actually do something in a business model that they haven't considered that could be quite helpful in their business for sustainability of growing their business. So thank you for sharing that.
In the previous podcast, I talked about people trying to just use comparison websites and getting the cheapest possible insurance. I'm now going to reframe that question for this podcast. How could an organization best work with its insurer to, if you like, minimize their premiums whilst maintaining good coverage? So what's the good practice approach rather than going out and just buying on price? How should you work with your insurer to get the best all-round benefit?
Number one is understand the risk that you face. Ask the right questions. Speak to your insurer about it, but also, speak to your municipality, do your homework so that you understand what you are actually at risk from. And then armed or equipped with that information, talk to your insurer about addressing those specific perils so that you're not buying coverage for something that you're not exposed to. If you're not in an earthquake zone, you don't need to buy earthquake coverage, but understand what type of coverage you need and then have the conversation around, okay, how do you reduce your risk and can I get rewarded for it? What sort of incentives? We always say shop around, talk to different insurers at renewal time, make sure you're talking to 2 or 3 at least and asking what incentives they offer, and then go with the one that seems to have your interest in mind because they're helping you help yourself. Those would be the best practices that we advocate no matter where you are.
It makes sense. It comes back to that comment before about literacy, doesn't it?
Absolutely. And no one's going to do that for you. You need to do your homework.
Yes. I've often thought there is this thing in a business. I can remember going on a business development course and they were saying, oh, what's your ideal client, customer? And one guy went, oh, I want somebody who's got a lot of money and is really stupid because I'll be able to make more money out of them. But actually, in the real business world, you want intelligent customers. You want customers or clients that are informed because that's going to lead to a much better business relationship and an outcome. Because I think I hasten not to call him a colleague, but the guy who said, oh, I want somebody with lots of money and is stupid, he will probably rip off that customer. And that will be the end of that business relationship when that guy wises up. So I think, we need far more collaborative working, don't we, between supplier of a product and the user of the product and the same with services, perhaps.
That's right. It shouldn't be a transaction. It should be a dialogue, right? Ongoing conversation. Insurers want to keep their customers and year after year, whether there's a claim or not. And so the relationship should absolutely be structured that way.
Thank you.
Okay. So Craig, I'm going to just stop because we talked about something briefly when we interviewed you and you talked about Canada's looking at doing something leading edge. Did you want to can we bring that up or is that too early to talk about that?
Yes. Dave. So yeah, absolutely. So Canada is coming up with its first national climate adaptation strategy. It is, I think the UK is on its third now adaptation strategy and is doing it for the first time. But the opportunity is to learn from others. When you're a laggard, and at least maybe you can leapfrog by learning from others. What we're looking at right now, there's head into COP27 in Egypt. It's a fair amount of conversation around establishing a global goal for adaptation. Adaptation has suffered. We've got greenhouse gas emissions goals. We've got a net zero target by 2050. Don't have anything like that on adaptation. And we've suffered as a result. So the question is, can we set crystal clear targets for adaptation that are time bound and where, industry that set the targets, the markers that industry and government need to meet together. And so what we've been doing in Canada as part of a broad coalition, we call it Climate Proof Canada. We've got, municipalities engaged. We've got the Red Cross engaged. We've got a number of NGOs, academia, and of course, governments is to come up with a national adaptation strategy that's targets based. And it's targets based on different risks. And the type of things that we're looking at are, in flooding, can we de-risk 35% of the homes that are currently in floodplains by 2028? Time bound, right? Real numbers. We know how to do it. We just need to collaborate and we need that target to focus that action. So that's one of the pieces that we're advocating. Can we limit the amount of displacement from wildfires? This is the big issue. Mortality is not as big an issue as having people out of their homes being displaced in the first place by better building standards so that people stay in their houses, or if they have to leave, they're evacuated, but then they can come right back in because the house is built properly and isn't damaged by the wildfire. Wildfires don't sweep through a town and build everything in sight necessarily. They tend to burn the homes that are not fire retardant. That's what we saw in Fort McMurray. In Lytton, the main fire swept through town because it was structure to structure to structure and the homes weren't built in a resilient way. So, and then on heat, can we protect those that are vulnerable? Can we basically reduce the number of deaths to almost zero? We had over 500 die in British Columbia last summer, which is unacceptable. And if we can identify who these people are and make sure they're protected, have cooling solutions, we add incorporate natural infrastructure to these parts of our cities so that there's green space. You don't have the urban heat island effect so much. These are things that we can do. And then another one is recovery, setting a target for recovery. We have people that are still out of their homes after the Fort McMurray fire, which happened 6 years ago. Can we limit that? Can we say we're going to get people back in their homes within 2 years, and work towards a target? There's lots that we can do around targets in the adaptation space. This is where Canada has an opportunity to maybe leapfrog and be a pioneer because no other country has got this right around the world. And that's what we're hoping will happen when Canada tables its first national adaptation strategy this fall in Egypt at COP27.
That sounds exciting. Yeah.
Craig, can you share with me some of the activities that the Insurance Bureau of Canada industry is doing, be a leading role based on what we've learned from other jurisdictions?
So the Insurance Bureau of Canada has played sort of a key partnership role. We have brought together the organizations with Climate Proof Canada, over 24 of them, so that we have a comprehensive voice in this country speaking to the importance of adaptation. We've led that. Obviously we've invested interest because we're losing so much, but it's also the right thing to do. And given the events that we've seen, it affects you when you're on the ground, seeing these places that are burned out. You've got customers that are out of their homes for years at a time. There's a real human effect. And so we've been leading this effort. We've also been leading the discussions with the federal government. I co-chair the Disaster Resilience Advisory Table together with Public Safety Canada, developing that national adaptation strategy. And we've been really trying to pioneer that work. We've also been leading the work with government around developing a national flood insurance program, learning from the UK, Flood Re in the UK, but trying to develop a model that will work given the particularly complicated confederated nature of Canada, where we've got provinces and a federal government that don't agree on very much often, and we need to make sure that they agree on this. So the industry has played really a leadership role in trying to, address what we would call the protection gap and the growing protection gap given climate change, trying to not just sit back and say, we're only going to insure those areas that are, presently insurable, and we're going to retrench in the face of climate change. No, we've done the opposite. We've said, no, we're going to go out. We're going to try to make sure that Canada remains insurable. And we're going to work with our customers, with governments, with municipalities to make sure that we are, setting up targets that will work together to de-risk the country in the face of this dynamic change.
Very good.
Well, that's been really interesting visiting all of that. But as you know from our first podcast, our last question is, what is your biggest takeaway for our listeners?
Well, I'm going to go back to what Dave mentioned, which is climate change is an opportunity. It's not, there's no point in fear mongering. It's now a reality. We know that it's real. We know that it's anthropogenic, and we know that we need to do something about it, both in terms of addressing the long-term effects, addressing it at the source through greenhouse gas emissions, and adapting to the effects that are baked in, we're already seeing. But this means for the insurance industry, new products, innovating in the product space. It means new opportunities for finding niches where companies can differentiate the way they approach, whether it's on the claims side, being very responsive and helping their customers when they're in trouble, or even upfront on the premium side, sending the right incentives, building them into the product packages. We think it's an opportunity for others, such as realtors and banks, to be innovating in this space, differentiating themselves from their competitors by the way that they help their customers deal with the effects of climate change. And as we talked about new investment opportunities, we talked about investing in defensive infrastructure, attracting private capital to that. There's opportunities to structure this as an opportunity to gain a return on participating in these sorts of projects. So we're living in a time of rapid change. And, there are always opportunities in such times for those that can position themselves accordingly. And that's what I'd like to leave your listeners with.
Certainly, I'm really pleased with what was covered, because so often there's so much talk about costs, and we all have to be mindful and the issues associated with. But you've really reinforced the idea that there's an opportunity and there's innovation that's going to have to be required, collaboration. Like, those are things that I think we'll have to hyperspeed that type of activity, because people tend to work in silos. The other thing that I was really pleased with, and you may have seen a smile when you said it, is most often in the work we do, most customers think it's a transaction versus like an ongoing understanding. And you reinforce that even in the insurance industry, that you got to know about this stuff. You got to build a relationship. You have to understand and not just do the transaction and never look at it again. So you covered a lot of things that we've reinforced to our listeners, that they do have to be really mindful of this on a continuous basis. So thank you for sharing that, Greg. John, how about you?
Yeah, I think there's been an echo of something that's gone through some previous podcasts, and that is where too many people think there are binary solutions. You do this, you don't do that. Renewables are good, fossil fuels are bad, carbon offsets are bad. And there's all that sort of thing. And I think this is the first of these podcasts where really the issue, or I say it's the second actually, but it's the first series of podcasts where the adaptation word has come up and come to the fore. And I do wonder, I'm just, we talk in 360 about, we try to have a business focused approach to energy and carbon management. And I think we've really got to, we've got to do our bit to encourage where we can the uptake of adaptation, because, we want businesses to carry on being businesses. And if they go and flood themselves, that's not good for us. And I think it shows a broader understanding, and perhaps it's something that we can do to help the sort of the literacy aspect of it. And as you say, I think we're at the point now where talking about adaptation won't stop mitigation efforts and won't be seen as being anti-mitigation. It's what we've got to live with. So I think for me, that has been a really valuable learning from our two podcasts, that we should be looking more constructively at adaptation.
Absolutely. Thank you for including it in the podcast, and thank you very much for the invite.
Craig, again, thank you so much for all your time. I appreciate it. I thought the information that was shared was going to be really helpful for our listeners, and I appreciate your involvement and the feedback that you've given us. Thank you.
Yeah, thank you so much.
That's all for today's episode of the 360 on Energy and Carbon podcast. Thanks for listening. Make sure to check us out on our website at 360energy.net and follow us on LinkedIn at 360 Energy Inc. Tune in to our podcast on Apple Music, Spotify, Anchor, or other listening platforms by searching the 360 on Energy and Carbon. You can watch the video recording and subscribe on YouTube at 360 Energy Inc. Email us your feedback at podcast@360energy.net or comment on our LinkedIn posts. See you next week.